Alright, welcome back. So in learning objective number 4, we're going to look at the requirement or the principle of reporting the cost of inventory at the lower of the following two, either the cost or the market / net realizable value. Alright, so what happened is so far we have been saying that the value of the inventory should be reported at cost. Alright, but sometimes the true value, if we use that term, of the inventory can fall below its recorded historical cost. So remember, at the beginning of the semester, we had that discussion about historical cost versus current value. You know, the two individuals, Jason and Emily, their personal belongings and what's the value of their personal belongings. So long story short, the reasons is the inventory could become outdated or damaged. You know, you put some stuff in the warehouse for, I'm making extreme examples and claims, for 5-10 years. You know, they can easily get damaged or become outdated. Like, let's say, maybe iPhone 4 or iPhone 6. 3 years ago when iPhone 6, just 3 or 4 years ago, I don't remember, when iPhone 6 just came out, it will cost you, I don't know, $600-700. But if you have a brand new iPhone in its original packaging, never opened in your storage, and hold on to today, what's the value of an iPhone 6? I don't think it will fetch $600 or $700 from a fair market. So your inventory become outdated, damaged, and sometimes it's easily replaced by identical goods at a lower cost, which is the case of iPhone I just mentioned. Outdated if you are, a merchandiser who carries clothes, and you have a bunch of clothes from last year, last winter, and you hold on until this winter, and most likely the style of the clothes will become so outdated that you will be lucky to get, half of the cost back. Alright, so those are the reasons why we have to adjust the value of our inventory, unfortunately, all the time downward. So the principle says if the value of the inventory falls below its recorded historical cost, then we have to write down the cost or the value to its market or net realizable value. So here, ideally, if there is an active fair market for the same goods, then we can use the market price. If that's not available, then we can use its net realizable value as its current value. Okay, so let's look at an example. We mentioned the example of merchandisers who sells clothes, and if we have vintage jeans, historical cost is $20, the current market value is $25, then we don't need to do anything. There's no write down. So the rule says if and only if the current value is smaller than the cost or the historical cost, that's when we're going to do write down. If the current value is the same, or in this case, in the case of vintage jeans, higher than the cost, then we don't need to do anything. Alright, so the next example, let's say we have some leather coats from last year. When we bought them, we paid $165, but now in the marketplace, the same leather coat will only cost $150. So in this case, value per item or current value is lower than the historical cost. We have to write down the difference. So write down $15. If we have 1,000 units, that's $15,000. So after the write down, if you look at it, it was $165. After the $15 write down, it become $150, which is the current value. And in terms of journal entries, we'll recognize that as part of the goods sold, because the reason that why we have this cost is to be able to generate revenue from selling those stuff. So all the cost, and here all the costs related to the inventory here is summarized into the cost of goods sold account. So cost of goods sold increased by $15,000, and then inventory decreased by $15,000. So debit cost of goods sold $15,000, credit inventory $15,000. One example was a couple years ago, Samsung Electronics had some issues with this phone. That's the new phone at that time, Galaxy Note 7. Had very serious health safety problems, and as a result, the company wrote off what? 2.9 trillion Korean won, which is about 2.5 billion US dollars, or roughly 11% of Samsung's net income for that year. So that's a huge write-off, following the lower of cost or market net realizable value principle. Lastly, we're going to look at the idea or the concept of inventory turnover ratio. So the amount of inventory we purchased from the suppliers, we sold them, and then we purchased again, we sold again, we purchased again, and sold again. So for most of the businesses, if we can sold our inventory at a faster pace, that would be better. So we use two related ratios to measure how quickly we can turn over or sell our inventories. The first one is inventory turnover ratio, which equals our cost of goods sold divided by average inventory. As like before, we calculate average inventory by using the beginning inventory plus the ending inventory and divide by 2. That's how we get the average inventory. So cost of goods sold divided by average inventory gets inventory turnover ratio. So how many times, basically you can understand the inventory turnover ratio as how many times inventory will turn over during the year. A second and related concept is days to sell. Here we use 365, which is the amount of days in a year, divided by inventory turnover ratio. This will give you a days. It tells you how many days on average does the company take to sell all its inventory. So some examples we have Harley-Davidson motorcycles, McDonald's, and American Eagle. The inventory turnover for McDonald's is super high. It's over 61 times per year, which translates to days to sell. That's 6 days. So, of course, as the leader in quick service restaurants, McDonald's wants to and is able to sell its inventory as fast as all of them be sold in 6 days. On the other hand, American Eagle, as a pale clothes manufacturer and retailer, they're able to turn over their inventory roughly almost 7 times a year. So it takes about 54 days to clear its inventory. Harley-Davidson, it takes about 58 days to clear its inventory, and its inventory turnover about 6.3 times per year. So finally, the assignments for Chapter 7 are listed here. Again, you need to go to the folder and then click on the assignment link. These 4 questions are available on Connect. Thanks for watching and learning with me.